Hey guys, welcome back to the Capital Mindset Show. We are your hosts, Austin and Fabio, and today we are going to be sort of talking about Intel. There's been some very recent news with Intel regarding Mobileye. It's a growing division of the company, and we're going to be kind of offering our thoughts on it, as well as sort of summarizing what's going on. So, without further ado, am I going to say it or am I not going to say it?
You're going to say it.
I'm not. What the heck are we looking at here today?
Okay. So Intel, did you already say that, the Mobileye?
Yes, I did.
Yeah. So Intel, is this a position in your portfolio, Austin? I forget now.
It is. It is. I like Intel. I think there's a lot of good things going for Intel. My issue is right now, management seems a little bit lazy. And that's kind of what we're going to get to the bottom of, because the shares rallied. I think it was yesterday over the announcement of the Mobileye IPO. But I was talking to you and you didn't really seem entirely too excited about it. So let's kind of dive into that now, why that might be here.
So yeah, the shares have rallied because they're spinning off their Mobileye division. And that supposedly can have a creative value to shareholders over the short term. Yes, because Mobileye is perhaps in a better growing part of the market, specifically in the space of autonomous driving. And according to the management, they are the only company that is capable of matching Tesla at current levels. Okay, so if that's the case, then okay, cool. You just want to get rid of that asset. That makes sense. And they want to basically raise some capital without cutting the dividend or doing anything else to kind of probably reinvest in their fab business. Because right now, the biggest problem with Intel versus AMD is utilizing Taiwan Semiconductors, because AMD is a fabless company and Intel is a fab company, for lack of a better term.
Would you kind of walk through the audience what the difference between fabless and fab is for right now, just for some context, that way the audience can follow along with this too?
So fab, when you say something is a fab company, for example, we're talking about fabrication facilities. So they have fabrication facilities. They actually fabricate the actual semiconductors. A fabless means they don't actually fabricate the semiconductors. They instead contract that out. And instead, what they focus on is the design of the semiconductor. So all of their brain power is focused on the design of said semiconductor. That's what AMD is.
Makes sense. Okay. Yeah. Because I was just about to ask why in this instance, being a fab company, because I can kind of tell why that might be a bad thing, but because they're fabless, that allows them to sort of focus on tweaking features or tweaking designs. And then that kind of can come into the fact that they can more properly allocate capital towards those things, because they've already got the actual development part taken care of by
all they have to focus on. Yeah, that's all they have to focus on. Their entire focus is on the product itself,
which could help explain why AMD's stock has, or not stock, why AMD's been growing so rapidly, because they've sort of implied. So my question now then is Intel sort of taking an approach whereby Intel they desire to become more fabless? And I think you just noted that this kind of plays a role in that as well.
No, they're not trying to become more fabless. They want to become better at the fabrication part, because that's what's caused AMD to take full advantage, because of the capabilities that Taiwan Semiconductor is leveraging for AMD. And Intel doesn't want to use Taiwan Semiconductor because for their long history, they've fought for this model, and that's the way they do it. And as well as there could be different ways as to how the techniques are being used to actually create the actual semiconductors, and Intel would prefer, I guess, because that's how management is continuing. Okay, so that's why I'm saying that. I guess they want to continue to do so because that's what they're continuing to do so. And it could be good or bad, but the point is they're probably spinning off Mobileye, which is, in my opinion, a very valuable asset to have. That was actually a selling point to invest in Intel. And they're doing so to perhaps raise capital to therefore invest in their fabrication facilities.
So now I have another question sort of about fabrication facilities, fab and fabless, because this is so crucial to understanding. This is the added nuance. It's so crucial to understanding these semiconductor companies. Now, we saw throughout most of 2019, as you can clearly see, I I built my computer. I have an AMD GPU that a lot of AMD was able to charge a lot of low costs for a lot of their products. Is this typically indicative of a fabless business? And then if so, what are
No.
some ways by which, if Intel being a fab business, they could produce their components better and more efficient? And then is this reflected in capital expenditures as well?
Well, CapEx is going to be a lot heavier for something like Intel, but no, it doesn't really guarantee that what you were just describing. It does perhaps allow for the potential for cost efficiencies because Taiwan Semi has to make a profit, right? So they take their profit. They have to give AMD the service for more than what it costs them. But Intel, the idea, okay, that's why I'm saying it that way. The idea is they can save those costs, right? That profit is their profit. And then they could simply sell, for example, at the same market rate to the consumer and generate a higher net profit on the sale of the product.
Oh, so if I'm understanding this correctly, there's a nuance, because in some instances it's more beneficial to be a fab, and then in other instances it's more beneficial to be fabless because
In
you
theory,
can
you
focus
can
on
have
the
higher
design
profit
better.
margins.
Yes, you get higher profit margins with a fab. I would assume,
or more
okay,
profits. Yeah, more profits with the fab because you're vertically integrated. But
okay.
that's the theory. And then in practice, you add a bunch of other complications that may arise, that did arise, and that's why AMD is basically catching up or has surpassed Intel in a lot of regards.
Well,
in their
I think
products.
another thing with AMD too is that Lisa Su is incredibly efficient at executing her vision with AMD,
Well,
and
that
I
was part of her
think,
vision to make them fabless.
yeah, and perfect then. And I also think too that Intel's management is getting a little bit sleepy. You know, when like we first started this channel, we used to talk about some things to watch out for with management was sleepy management. And I
Yes.
think in this instance, we're actually kind of seeing Intel's management is getting sleepy. So now kind of focusing back here to Mobileye, we can make another video sort of going into the semiconductor industry as a whole and just sort of exploring more of these concepts with you guys. And I'll be the host with the most, we'll be the hosts with the most, and I'll ask all the questions. But now kind of focusing back to Mobileye, focusing back to Mobileye here. Why do you think, at least in your opinion, that they decided to spin off this growing segment of their business here?
Well,
Well, I
no,
mean,
yeah,
other
like I
other than
said.
like raising cash, do you think that there might be potentially, because of there might be maybe something behind the curtain that a lot of investors could maybe not be seeing with this?
No, I also think it's maybe for again the short term, they might have had some pressure from big investors to spin off Mobileye, because Mobileye, in my opinion, is a valuable asset, and they might not want the legacy business to be attached to that. So some investors may just want that to be separate, and so that they can invest just in Mobileye and not the rest of the business because they don't think it's attractive. I think that there is a strong case for that, that the legacy Intel may not be as attractive as Mobileye. However, I think that some of the parts, I preferred it to stay what could be undervalued, right? What could be perceived as undervaluation. And the whole thing staying together would, I think, have made the company a little bit stronger. But okay, there could be an argument that they're going to be better managed separately. So that would be more the case of Mobileye. Because if you think Intel's management is sleepy, oh, you don't want them to have anything to do with Mobileye. You want those guys
Yeah.
to stay away from Mobileye so that Mobileye can realize. So then if you're making that argument, I can probably agree with you.
Yeah.
And that's very logically consistent. And I think in that case, that argument's very sound. And I would prefer to then, if I believe that, I would prefer to just invest in Mobileye. Now, here's what you have before you. You can buy it now and wait for the spinoff, or you can wait for the spinoff, then buy Mobileye, right? Because then if you buy now, what you're going to have is you're going to have Mobileye, and then you're going to have, well, actually, no, I think they're IPOing Mobileye. Yeah, I think they're IPOing. They're not like spinning it off per se. I think
Wait,
they're
no,
IPOing.
I thought they were spinning it off. I thought it was like an agreement where it was like if you own one share of Intel, you get 2 shares of Mobileye. That's what I thought was the case. I
Did
could
you
be
read
wrong.
that?
Let me check.
Because there's two ways they can do it. They can IPO it, right? Which in this case, you won't get a share. They're just literally selling the shares on the market. And or they could be spinning it off. So they're giving you a share, or they could be doing a mixture. And if they're doing a mixture, then there you go.
Intel surges on Mobileye spin-off as chips lock in best day. Okay, so we would have to find this in like an 8K of something.
No. Just keyword IPO, or
Okay.
they say the shares.
All right, so Mobileye IPO could help Intel stumbling stock. Intel plans Mobileye IPO. What to know? Intel remains a hold after Mobileye IPO news. Some peers look good. Okay, so it's kind of looking like a wait and see to me. It looks like it's most likely going to be an IPO, but I kind of hope for my sake it's a spinoff and I get some nice shares through my ownership already in Intel.
Or I mean, if you really wanted Mobileye, you just sell some of your Intel and you buy Mobileye. But if it's an IPO, if they're just actually like listing it to the public, then that would be an indicative of a capital raise, and then they could be using that capital for whatever reason. But if they're just doing a spinoff and they're giving their investors shares of Mobileye, that's a little different. But in that case, you have two options: wait and see, or buy now. All right. So that being said, I think we should just take them to the model.
Yeah, I was about to comment too that I think the entirety of the Mobileye thing, because of sort of the craze, like the self-drive car craze right now with Rivian, especially, no better example than Rivian, and then Tesla as well. I think that this, at least in my opinion, there could be a behavioral finance play here in effect with Mobileye as well. In fact, I
but that's a
believe
speculation.
the hype. Yeah, it is. It's a definitely a speculation, but I do actually believe that the hype will probably propel Mobileye, if I'm being honest.
Yeah, and okay, so what I'm looking at here, I'm seeing with a discount rate of about 17%, so pretty decent discount rate. You would have to believe that they're going to grow at 15% per year, which is probably not feasible. No. And I think that they're more going to grow in line with 5 to 7%, which kind of means it's overvalued.
Oh yeah, I was about to say that a lot of people typically say that Intel is overvalued. Although I also see people saying too that Intel will always sort of trade at a premium, because correct me if I'm wrong, semiconductor stocks typically tend to trade at premiums.
It's not at a premium.
Yeah,
it's not at a premium.
How is a premium defined then?
Exactly. That's why we have to be careful. Premium is defined by the market. So what is the market PE right now? What is the S&P 500 PE? Do you know off the top of your head, or a range?
I would guess
20. It's like 20.
Yeah.
Right now, 21. Okay. So the PE of Intel is 9. It's not trading at a premium.
Okay. However, so if I'm understanding this correctly, when something trades at a premium, it's trading over the S&P 500.
Yes.
Or like the PE over the S&P. Okay.
Yes.
All right.
And here's where the okay, so I consider myself a value investor, but value investing has distinct definitions. Buffett, I think, puts it beautifully when he says value investing is the only investing. There is no such thing as growth. These are words created by the finance industry to make things seem a little bit more weird. It makes it weird. Value investing is the only form of investing because everything has value. Like a growth stock is a value stock if it's growing a lot. All stocks are value stocks. If they are a bargain, if they're cheap for what they're doing, it is a value stock. Now, in the finance world, they like to use value stocks as, oh, it's cheap on a PE basis. It's discounted relative to the market. Well, look how stupid that is. Look at Intel right now. It's a PE of 9.97. And when we just do simple discounted cash flow analysis, we see, let's lower this. Let's say 15%. So at 15%, that's okay. That's decent, right? But it's not really a value play. It's basically priced for that. Okay. It's priced for 15% rate of return if it can grow more than it has in the past. Okay. If it's going to grow around where it has in the past, it's overvalued. Okay. For what that is. And if you're trying to get close to market rate of return, so we say 12%, then you can therefore assume that's 12%. Well, that's 210% over the course of 10 years. Congratulations. Okay, so this is not a value stock. This is not a value stock. It depends on the definition you're using. I don't define this as value stocks. I like to define value investing as just investing in companies that are undervalued relative to their potential performance. That's it. That's value. That is value. Simply put, that's how Buffett defines value. And that's, I think, the best appropriate way to define value investing. Because if you say value investing is, oh, book value is this, it is below book value, I buy. Oh, congratulations. You're just not looking at the nuance.
Well, yeah, that's as we like to say here on the Capital Mindset Show, thinking in the box. Which,
you're thinking in the
by
box,
what
yeah.
I've gathered, you have to take that box after you've built the foundation. You understand financial, or you understand accounting, and you understand finance. You got to throw that box out the window.
You destroy that box.
Realize that with, honestly, it's getting to the point where every single company has nuance to it.
Yes.
Like it's
yes,
literally,
yeah,
there
yeah,
are no
yeah.
two companies that you can literally just apply a stroke to, like a brush stroke to, you know?
The best way to get good at investing is to realize that investing is very fluid, and everything you see will be in a way unique from the other experiences you've had. And it can be extraordinarily addicting because there's always new things to learn. And that's what I love about it.
And it's fun. It's just fun. Like, especially going into these models, using our brains, you know, because there's no free lunches, and then there's also just no guarantees of the future either.
Correct.
So,
and I'll say this, I actually could probably agree. I actually agree with the analysts here that it's a hold. That would be my rating on it. It's a hold, depending on what your expectations are. For me, my expectations, it doesn't meet it. And the fact that they're going to cut off perhaps the fastest growing part of their business is a big turnoff for me. I would prefer to invest elsewhere, based on my required rates of return, where I want to allocate capital.
And
Intel's
also,
just not for me.
Yeah, and that sort of speaks to management too. It kind of speaks to management initiative in this regard as well. You know,
I want to add a caveat to everything I'm saying.
Yes.
Okay, but this is the problem. What I'm about to say is it pertains more to people with a lot of money.
Yep, say it.
So they can profit better from this than someone with less money, because they are able to implement strategies that you simply cannot unless you have tons of it. So what I'm talking about is selling calls, right? So you can actually raise, if you think a company is not going to actually grow that much, or it's not going to be that volatile, which, by the way, look at the beta. What does that beta say, Austin?
Hold on, I got to find where beta is.
Oh,
where is it in this model?
Right here.
There it is, 0. Okay, so that's telling me that it's probably not really volatile at all.
It's not volatile at all.
Yeah.
This company would probably be very lucrative to sell long duration, not long duration, but short-term duration, out of the money call options. And you keep doing that over and over and over again over the course of the year, and you can actually up your growth rates. You can up that rate of return by quite a bit. And
okay, so the thing is, this does not constitute financial advice. This is just exclusively for entertainment purposes. And then B, what are the risks here? Like, what could go wrong with what you're proposing right now?
You're holding an asset. You're holding Intel that could, in theory, go bankrupt. That's still always the risk. That hasn't changed. Yeah. But if you're selling out of the money call options, you're selling. If you get executed, you still make a profit, because you're selling out of the money from hopefully above what you paid for it. I mean, you'll just be crying that you didn't make as much money, but like, you know, that's not really a risk. That's an opportunity cost, but it's not a risk. So I think with that, you could actually raise the growth expectations over time. There are some companies out there that you can do this with, and you can actually generate decent amounts of return. This is, I think, one of them. But if you're just going to hold the call, it's not call, sorry. If you're just going to hold the common stock, I don't think it's really worth your time. So like, if you can buy, not if you, because that sounds like I'm giving advice, but if I can purchase a large quantity of shares and I have a plan to execute in terms of selling short-term duration call options into the future, I'd have to take a look at the options market. But opportunistically, I could probably generate still market-beating returns with Intel, assuming that they're able to still perform somewhat, because if I'm just relying on the call premiums, I'm probably not going to outperform. It'd have to be kind of still like they perform still somewhat well, and then I'm able to properly execute those.
So again, it just comes down to the premise of nuance here.
Yes.
But it seems like to me, at least like by what I'm getting, you're not really as excited about Intel anymore because of what they're choosing, what management has chosen to do with this here.
Yep.
So do you have any closing thoughts before I wrap up the show here today?
I'm very happy. It was a very small portion of my portfolio.
Yes. Yeah, that's definitely a good thing then. All right. Well, we are your hosts with the most, Austin and Fabio. This is the Capital Mindset Show. We hope that you've enjoyed what you've seen here today. If you have, please be sure to share the video. It really, really helps out the channel. Please be sure to like, comment, and subscribe, and visit our website at capitalmindset.org. We are your hosts, and we'll see you guys later. Take care.